Love it. So I'm a broker on the brokerage, so I don't like Smith Lending. There's no fund at Smith Lending. I broker the deal out through whoever, through Rocket Mortgage or through United Wholesale Mortgage or whoever. I don't really use Rocket Mortgage, but essentially I'm like a 1099 loan officer, if you will. Right. Instead of being W-2'd at one company, I can work with any company realistically. Now I get rates on the whole side. So like my kind of thing, and that's why I'm super transparent about the rates that I post. I've been like that since I opened up the brokerage. And I've gotten a lot of flack from that from other loan officers in town, just because they're like, you can't post these rates. And I'm like, no, I'm in full compliance. I am in compliance right now. I've got a compliance attorney because my rates are lower than I'm normally about a quarter to 0.375% lower, if not more. A lot of my business does come from that, folks that are connected with like a direct lender, like a guaranteed rate or like a cross country or something like that. Because when you work for one company, like when you're a W-2 employee for one company like that, you're inherently going to have a little bit higher interest rates. You've got more hands in the pot. There's no other way around it. So that's kind of my transition into the broker world. Was I didn't like that whole rate shopping game. I just want to offer low rates right off the rip. My ideal client, at least a minimum of a 580 credit score or higher. I can go down to a 550 score, but they have to put 10% down.
With a 580,
so 100,000.
That also 10%. Is it less than 10% down? Do they qualify FHA on a 580?
Yes, sir. Correct. Yes, sir. So down to
but ideally a
640.
Ideally credit score.
Well, yeah. I mean, I'm about to put out a video actually next week. So if you follow my page, you're gonna get this video. But in my video, I say if you've got a 580 credit score, give me a call. Like, because we can work with the 580. So I'm pretty confident with that. Now, if you're looking at conventional, I've got this like form that I send out. It's like a mortgage cheat sheet. And I think my minimum score on conventional is like 660 or 680. And I've gotten questions about that before because the minimum score for conventional is actually 620, but you are not getting approved for conventional with a 620 score unless you're putting a ton of money down. You got a ton of money in the bank. Like, there has to be other compensating factors. Conventional is very, very finicky about a lot of stuff. FHA is pretty gravy. But yeah, $100,000 loan amount is pretty much the minimum that I can go to, for the reason that you said earlier about the high cost loans. Because as a broker, we've got really high compliance on our side. Banks and builders, man, they must have like the most paid for lobbyists in the world because they can do whatever the heck they want. Me, I have to follow the rules to a T. So like under $100,000 loan amount, we run it like the government tells us we can't even do that loan, which is crazy. And then I can do jumbo, like I can do VA jumbo, very, very competitive in that market. So for veterans, my rates will typically always be lower than even like Navy Fed and USAA, that they typically have the lowest rates, and mine will be lower. But you got to think, like, that's one piece of it. Joe,
what's VA jumbo?
What's VA jumbo?
You said VA and jumbo kind of together, so it sounded as if you were saying
together. VA jumbo, one thing. Jumbo conventional would be different than a VA jumbo. So, and that's why I separated the two, because conventional jumbo, like I opened up, but I'm really, really transparent. So if they're conventional jumbo, then there is some money manager out there with like JP Morgan Chase or Wells Fargo or like Mutual of Omaha. They're gonna have some weird jumbo held in-house financing where they can get like a really silly rate of like 4%. So that conventional jumbo, I can do them. If you refer me a client, I will roll out the red carpet, but their money manager can probably get them something else. Now, VA jumbo is a little bit different.
Jumbo is just a large loan?
Yes, ma'am. Over $726,000. So if the loan amount is over $726,000, that would be jumbo. Now, VA jumbo is a little bit different because if they have full eligibility, if they don't own any homes already with a VA loan, then they can go to like $2 million with 0% down. The VA jumbo loan is a special product that I really like. And our rates, we don't have super inflated rates for that. Like Veterans United, they shove a ton of fees in there on those things. So I'll really shine with the VA, with FHA, as long as it's over $100,000 loan amount. And that's my sweet. And conventional as well. But like I said, conventional up to 726. Because over, I can still do it. But my whole thing is I want to give that client a really good deal. Like what Ann opened up with, like making sure that they're in the right product. And that is the right product. Like if your client is between 100 and 726,000, they're FHA, VA, or conventional, there is no better route than a broker. The broker is going to have the best rates. That's why I'm on this side, because I want that market. Like a lot of people are like, like my office is in downtown. They're like, why aren't you going like the, the South Tampa $1 million homes? I'm like, that's not my market. Like that's not my, if I wanted to do that, I would have to go work for Truist, which I don't want to do. I like my people, man. I like this spot.
Oh, I'm sorry. So the, do you do vacant land? Before I get my thoughts lost. Any vacant land product?
There has to be a home on the property.
That was it.
So manufactured homes, single family homes, condos, townhomes, we can do that. USDA, we can do pretty much everything, 100,000 to 726 with a home. We're going to be the best bet for that. And Jackson, plus they get to work with this personality. Like, come on. No, I'm kidding. But no, seriously, they do. Like, I work with my clients day one. They call my cell phone. I work with them the entire way through. I manage all the deals myself through the process. They hear from me every single week, and I'm going to be at the closing with them. So for me, I really, really want that 5-star review. I got like 135 on Zillow. I just started pumping up Google. I think we're at like 30 or something like that on Google now. And on Facebook, I don't know what I have on Facebook, but like my whole thing is that I want a 5-star review from every single client. And how do you ensure a 5-star review from every client? They give me. Cool. All right, guys. Any other questions?
Okay, I think I need Hey, I'm Fanta. Okay, so
Hey, Fanta.
I was listening carefully. To my understanding, you said a FHA loan, typically a 580, you can get them some kind of financing. And what would the interest rates typically be at a 580 credit score?
Let's say like the starting rate for FHA is 5.5. If they've got a 580 credit score, they're probably going to be like maybe 6.5. I'm just doing this off the top of my head, so don't like hold me to this. But instead of asking for 3% for the seller to cover on closing costs, we're going to want to ask for like 4% for the seller to cover on closing costs. Because as you get closer to that 580, your rates are going to go higher, and it's probably going to cost a point for that rate as well. So it's doable. It's just a little bit more expensive. FHA, you probably see the fall off for that around, Jackson, like you said, around 640. Under, 639, depending on the scenario, you're probably going to see it go from like a 5.5 to like a 6.125. Now, it's like conventional. If you go under a 700, you're going to see that rate start to tick up. Like rates are 6.5, you're putting 5% down, and your credit score is a 700. You're putting 5% down on conventional with a 700 credit score. You'll go from like a 6.5 to like a 6.875 or like a 6.9. So conventional is really, really touchy on the credit score. So like, in most cases, if a buyer has under a 680 credit score and they're wanting to put minimum down, we're going to want to go FHA. Like pretty much under 680, go FHA. Yes, sir.
So as you can see, we're talking about people who have credit challenges, right?
Yeah.
Like that 580 score, first time home buyer. We run into quite a number of these folks. They want to buy a home, but if you have a 580 score, it's not just the score you're dealing with. You're probably going to have a debt to income ratio issue. You're probably going to have how do you have enough of a down payment issue? It's a multi-tiered prop, right? And are you offering any services if I refer you a client, and most first-time home buyers off rip are not going to be ready to just jump into a house. A lot of times they need nurturing. Are you offering them any credit counseling? Are you offering them are you nurturing along with us? Or are you just like, look, you can qualify?
No, I do. So, and the way I do it is I'm not a credit professional, and I'm not going to try to fix their credit. I think that's overstepping my bounds. I want to stay as an expert in my space, but I do refer out to, it's called the credit movement. So if you want to Google the credit movement, I don't have any affiliation with these guys. I've just been doing this for 10 years. And like,
you think they're legit?
I think
they do the job.
I think they're legit. I think there's a lot of non-legit people out there, and I think they're legit. Now, I'll talk to someone, give them a game plan, refer them to the credit movement. And then what I do, I use Salesforce for all my for my CRM and for my follow-up. And from that point, I'll put a follow-up for a week out from that. I'll reach out to them in a week and say, hey, we talked a week ago. Here was the game plan. Have you done what, have you not in these words, right? But I'm like, have you done what you were supposed to do, right? So are you following that game plan? And if they have, then I put the next follow-up for a month out from that, because credit runs in cycles of 30 days, right? So if they got signed up, it's going to take a 30-day cycle to get any kind of update. So I set a follow-up for 30 days out, and then I touch base with them every 30 days, make sure they're staying on pace. Like you said, most of the time it's multi-tiered. Most of the time we got tight on credit, we're tight on assets. So you're having to coach them through saving assets. Are you budgeting? Did you ball out this weekend, or did you save your money because you're supposed to be saving your money? And that's what I pretty much do. Now, if I'm not getting any response from them, I'll pass it back to you. Like, hey, I talked to them. They needed credit help. I referred them over here. I haven't heard from them. what would you like me to do? And if you're like, stay on them, I'll stay on them. But most of the time, what I found is if I'm not getting any response, then the referring partner probably is. And it's best if they can foster that relationship. So I kind of just work on a case-by-case basis.
I think Fanta had some more questions. Were you raising your hand, Fanta? I'm sorry to interject.
I guess I'm just like soaking it all in because it sounds like your ideal client is probably someone with a healthier credit score and that's ready to go the conventional route. But from what I can see, based on the market watch, the forecast isn't looking too good for our first-time home buyers, which makes up a large amount of our market. So I'm just trying to figure out like how can we get more first-time home buyers into homes? It sounds like they're going to have to work on their credit health. But I mean, it's like the more credit challenged you are, you're going to get hit with a higher interest rate and you're going to need a heftier down payment. So it's like I'm trying to figure out how to best guide, these future buyers. Like I am a part of that millennial audience. So yes, my background also is in finance. I understand finance and numbers, but I'm a real estate investor. So I'm going to be guiding a lot of first-time home buyers. But like I said, credit the credit 580 is what we're going to be looking at, 620. And I mean, obviously they got to fix their credit. So they got to pay down these medical bills, consolidate debt. So it's going to be a little challenge there.
Well, don't pay medical bills, but you don't want to pay medical bills.
I'm just thinking like, wow, what is the market looking like? Based on the market watch that we just seen, rates are going to go up, or even if it stayed constant, who's getting approved for these FHA loans? Like it's gonna.
I love FHA. FHA is awesome because FHA was like non-existent in for like the past 2 years. You couldn't get an FHA offer accepted. It was like that was really bad back then too. I mean, you want to talk about like that stuff. But nowadays you can get FHA people in. You can negotiate closing costs. I just helped a lady that had a borderline credit score, and we got her. Actually, Jackson, to your point, we got her like 4% in closing cost credits that we applied directly to her rate. We took her, that was a lady, we took her from like a 6 point something to like a 5.125, and she was able to qualify. She got this like amazing home. That's what I'm saying. Like if you've got at least a 580, let's chat, man. We can make it work. You need 3.5% to put down. That's the next hurdle, right? It's like 580, and then we need a 3.5. We can get conversation going. We can figure it out. If we can get to talk and we can figure out where to find some money, you know what I mean? If you're working, you want to buy a house, you've got the desire, make it work.
Hey, Douglas, I'd like to ask you there's a side question that I ask all loan officers. So you've been in the business for 10 years, right?
Yes, sir.
And I'm sure you have a bunch of clients, probably some of your best clients, some clients who send you a lot of business. The clients who are most successful, the ones that are sending you the most deals, where are you finding that they're gaining the success from? Meaning, I'm always looking for tips and tricks. What's working? Who's working? What's working for people out there?
I love that question. And I do have to get running, guys, because it's 10 o'clock, but I want to answer that question for you because that's my passion.
Okay.
Like that right there. And my little quick tips on this, and it's the same way that I run my business, all referral based, all sphere, get with your people, love on your people, meet with your people, talk to them, care about them. That's where you're going to get the most amount of business.